Hey everyone, welcome back to Corporate Decoder, the place where we discover that sometimes the simplest purchases can hide the most interesting stories. Before we dive in, if you like getting straightforward insights from company filings, hit that subscribe button. And for more discussions and direct access to our team, join our Discord community linked below. Today we are looking at a filing from Functional Brands Incorporated. Now this is not your typical quarterly report, but a current report on Form 8. Think of it like a special announcement that companies have to make when something significant happens. And this report from Functional Brands Incorporated is about a pretty interesting transaction. So what happened was on the 5th of February 2026, Functional Brands Incorporated made a deal to buy back some of its own stock. Specifically, they entered into an agreement called a convertible preferred stock purchase agreement. This means they are buying back all of the series, a convertible preferred stock that was held by a company called Evergreen Capital Management LLC. Now this sounds a little technical, but basically Functional Brands is taking back shares that they had previously sold. So the company agreed to buy these shares back, and in return they paid $50 for each share. They bought a total of 12,445 shares. So if you do the math, that works out to a total of $622,250 they paid for this out of their available cash. The deal actually closed on the 6th of February, the day after the agreement was made. And what happens to these shares once the company buys them back? Well, the filing says these shares will be cancelled. This means they will essentially disappear from the company's records and will not be reissued. Now, why would a company do this? The report explains that they bought these shares back to help reduce potential dilution. Dilution is when the value of existing shares gets spread thinner because a company issues more shares. By buying back these preferred shares, they are essentially removing them from the equation and hopefully protecting the value for their current shareholders. It is a strategic move to manage their ownership structure. Looking at Functional Brands Inc., it seems they are a company that is being careful about its financial structure and proactively managing its equity. This repurchase suggests a focus on shareholder value and potentially a sign of confidence in their future prospects. They are actively cleaning up their capitalization table. It is also worth noting that they are identified as an emerging growth company. This means they are a smaller company and have some regulatory advantages. This repurchase of stock is a pretty significant move for a company of this size, and it indicates a mature approach to financial management even as they are still growing. Their common stock is listed on the Nasdaq stock market LLC under the ticker symbol MEHA. This is important because it shows they are a publicly traded company, and these filings are meant to keep investors informed. Now, you might be wondering what this all means for the company's overall health. While this filing doesn't contain detailed financial statements like a quarterly report, we can infer some things. The company had enough working capital to make this significant repurchase of over $500,000. This suggests a stable cash flow and good financial health at the time of the transaction. It shows they are not running on fumes and can afford to make strategic financial decisions. This move also signals that management believes their stock is undervalued, or that reducing dilution is a priority for long-term value creation. In terms of risks, the filing mentions that there can be no assurance that actual results will not differ materially from what the company expects. This is standard language, but it implies that future performance is not guaranteed and is subject to various market and operational factors. The success of this buyback will ultimately depend on whether it leads to increased shareholder value and improves the company's financial standing in the long run. So what is my take on this filing? Well, Functional Brands Inc. appears to be a company that is thinking strategically about its capital structure. They are taking proactive steps to manage potential shareholder dilution, which is a good sign for long-term investors. The repurchase also suggests that management has confidence in the company's future earnings potential. The main opportunity here is that by reducing dilution, they may be setting the stage for a more concentrated ownership structure, which could lead to better per share performance. A notable risk is always that the price they paid might not be the best price in hindsight, but given their stated goal of reducing dilution, it was likely a calculated decision. The company is on a path to refine its equity structure, and this purchase is a key step in that process. Alright, that is our breakdown of Functional Brands Incorporated's latest filing. What is your take on this stock repurchase, and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.